This is Akashvani. In the program Insights, now we bring you a discussion on IMF growth forecast for India. The participants are S.P. Sharma, economic analyst, and Rajesh Lake, anchor.
Dr. Sharma, can you provide an overview of India's growth projections by the IMF for the year 2023, and what are the factors which have contributed to the IMF's growth projections for India?
India's growth projections are very promising, and they have upgraded India's growth to 6.1% for the current year, because these projections are for the calendar year. So that may be different from the overall financial year of India. Overall, they have provided an overview of the growth projections for the world economy also. Like the world economy is expected to grow 3% for the current calendar year, decelerating from 3.5% last year in 2022. And the growth will be 3% again in the 2024. Regarding the inflation trajectory for the world economy, they have anticipated that inflation will be at around 6.8% for the current year, decelerating from 8.7% from last year. And next year, the inflation will be 5.2%. This is the overall inflation, world inflation, headline inflation. And regarding the trade, because trade is also a very important aspect of the global economy, they have provided projections that trade trajectory will decelerate from 5.2% in 2022 to 2% in 2023 and 3.7% in 2024. Overall focus is that the shipping cost and the supplies delivery is now at the pre-COVID level. Means supply side is becoming more and more robust and supply disruptions are now decelerated. So again, the global economy still faces a few challenges, but particularly the advanced economies, because their growth is still not that much robust. They are decelerating from the growth trajectory from 2022 to 2023. Like the US economy is decelerating from 2.1% in 2022 to 1.8% in 2023 and 1% in 2024. Euro area will also decelerate from 3.5% to 0.9% in the current year. And then UK is also decelerating from 4.1% to 0.4% for the current year. Japan is upgraded from 1% to 1.4%. And the emerging and developing Asia is upgraded from 4.5% to 5.3%. But China from 3% to 5.2%. But the India's growth story is totally intact, and as India will be faster than China. China will grow at 5.2%, but India will grow at 6.1% for the current calendar year. And for the next year also, India is projected to grow at 6.3% as compared with China's growth rate of 4.5%. So in the post-pandemic era, we are moving ahead and we are faster than the economic growth of China. So that is the promising growth trajectory of the Indian economy. And I would like to mention the inflation scenario also, that inflation for India is expected to decelerate from 6.6% in 2022 to 4.9% for the current year and 4.4% for the next year. And the exports for India will be 3.7% for the current year and 4.7% for the next year. So these are the macroeconomic numbers for the Indian economy, which are very robust as compared with advanced economies, emerging and developing economies, and of course in the top 10 economies, India is a growth leader and growing faster than any economy in the top 10 economies. So the growth drivers are majorly the consumption story, which is now supported by the government. The government capex has supported significantly the growth trajectory, and the overall demand is also becoming robust, because now the inflation trajectory, which was very high in 2022, now has decelerated to the level of 4.8% in the CPI and minus 4% in the WPI. So the inflation is decelerating and growth is becoming more and more robust for the Indian economy. That is the promising growth story of India.
Okay, so you mentioned about India's robust growth, and you also compared India's growth forecast to other emerging economies in the region, and you also touched upon inflation and other factors that can affect. But are there any risks or challenges that could potentially impact India's growth prospects as assessed by the IMF?
Yes, there may be some challenges because still Russia and Ukraine are in conflict, and that can cause some escalation in the international commodity prices in the coming times, because if the war is not stopped, that will again disrupt the supply chains, though the supply chains are intact right now, but the price escalations can't be ruled out as the war is still going on. And then the banking sector, which is now becoming strong as compared with the earlier quarters, because now the advanced economies are more and more reluctant for their soft landings. So they are now very strict in their lending scenarios. So that's why in the coming times we have to check the soundness of such banking scenarios in the advanced economies. And thirdly, as there are disruptions in the weather conditions, so price escalations in the perishables and in the food prices can't be ruled out in the domestic economy. So these worries are still hovering, but the numbers are very, very promising, as the headwinds are not able to impact the trajectory of Indian economy. As we have observed during the time of Corona, that India faced the headwinds and India recovered in the second quarter of the pandemic, and in the very much next year of the pandemic, India grew more than 9%. And again, on that high growth, India grew at 7.2% in the last financial year. So overall, the growth trajectory is very promising and very resilient in the coming times.
You mentioned the banking sector. Which other sectors or industries are expected to drive India's economic growth according to the IMF's projections?
Yes, infrastructure is a great story for the Indian economy, and India's pharmaceutical sector, IT sector, all these sectors are very bright sectors of the growth trajectory, and growth is becoming robust on the basis of the reforms undertaken by the government for these sectors, as government has provided so many reforms for the infrastructure trajectory, like from the national infrastructure pipeline, and then the Gati Shakti, which is connecting the various ministries to move forward and to make reforms more and more robust. And thereafter, the implementation of reforms such as the ease of doing business and the single window system are supporting the ease of doing business at the ground level. Factories are able to move forward with more and more robust numbers, particularly in the post-pandemic era, as government provided a lot of reforms for the small businesses during 2021 and 21-22. And there is again talks about the decriminalization of the minor offences, and the government is very serious about the easing of compliances for the companies which are hampering their growth story and growth trajectory in the coming times, so that their growth becomes more and more supportive and robust, and also able to create the employment opportunities for the growing young population. So overall, reforms and the measures undertaken by the government and the Reserve Bank of India, like the calibrated steps which dented in the high inflation trajectory, and the support from the government to stabilize the demand trajectory, that was a great equilibrium in the Indian economy, that despite the high inflation, we were able to manage the inflation also, and growth more than 7%, and inflation we decelerated less than 5% within a year. So all these reforms has supported very much thought process and the trajectory of Indian economy.
So how does the IMF's growth projections for India align with the government's own forecast for the same period?
Because the IMF's projections are according to the calendar year, so government has forecasted somewhere between 6 to 6.8%, but the IMF's calendar year forecast is 6.1%, and for the next year 6.3%. So if we take a view of the three growth scenarios like the 2023-2024, then the government projections of 6% and 6.8% and RBI projections around within the trajectory of the government forecast. So we can consider at around 6.5% for the current financial year, which is, I think, very much achievable. And the numbers like the GST numbers and the passenger vehicles growth, and then numbers by the corporate and IIP numbers, core infrastructure numbers are very much supportive for the growth of 6.5% for the current financial year, as all these macroeconomic numbers are very, very promising. Though there is some slowdown in the exports trajectory, like the merchandise exports are decelerating since the last 3 months, but the services sector, services exports are supporting the overall export trajectory. So going ahead, I think the growth will be picking up again in the months of October, November, and there will be a normal growth trajectory of the Indian economy in the third quarter and fourth quarter. So the growth is anticipated at around 5% on the basis of all numbers provided by the IMF and the government and the Reserve Bank of India.
You mentioned about inflation. So are there any concerns about inflationary pressures and their potential impact on India's growth outlook for 2023 as highlighted by the IMF?
Yes, there are some potential worries, but I don't see that inflation will impact the normal growth trajectory, which is somewhere 6 to 7%. That will remain, that we will grow at around somewhere between 6 to 7%, and the growth rate is 6.5%. But the inflation scenario, escalation in prices or the inflation again picking up can't be ruled out, as the weather conditions are very abrupt and there are some supply disruptions within the domestic supply chains, like the perishables are at high prices. So though inflation may again hit the country, but the growth scenario will remain intact somewhere between 6 to 7%. There is no worries about the growth story decelerating below 6% for the current financial year, as the fundamentals and the macroeconomic growth numbers from the core infra, IIP and other supportive sectors are very, very promising, and growth will be somewhere between 6 to 7%.
And Dr. Sharma, we did discuss about the policies of the government, but how does the IMF view India's fiscal and monetary policies in the context of their growth projections for India?
Yes, their anticipation is that the calibrated steps by the Reserve Bank of India and the fiscal policy of the government are in the calibrated mode, and in the coming times the fiscal scenario has to be addressed more calibratedly so that the inflation is not escalating or stoked in the high range. So the overall picture is very promising, but challenges always remain, sometimes from the global headwinds and sometimes from the domestic origin. But this time, the major challenges are coming from the global headwinds, like the decelerating growth of the advanced economies and geopolitical developments. These are the major challenges which are impacting the growth scenario to achieve its potential, that is more than 8% for the Indian economy. So that's why the normal growth curve was somewhere between 6 to 7% is still promising on the basis of domestic support and domestic consumption story.
So, Dr. Sharma, can you discuss the IMF's outlook on India's balance of payments and its implications for the economic growth in the coming year?
Yes, balance of payments, there are no major worries for the balance of payments, as we have good attractiveness for the international capital flows also, like the foreign direct investment and the exports, and are still intact. We will not be in the high trade deficit for the current financial year also, because exports are expected to pick up from the month of October or September or October. So overall balance of payments situation will remain normal, and there are no major worries for the balance of payment situation, because the deceleration in the merchandise exports will be compensated by the services sector exports, and flows from the investments like the FII investments and the FDI investments will remain intact, as the reforms are very, very promising and robust, and markets are making the new highs. So overall macroeconomic picture and the external scenario is very promising and in the right direction.
On that note, we would like to thank you, Dr. Sharma, for being with Akashvani.
Thank you, sir. Thank you.
You were listening to a discussion on IMF Growth Forecast for India. The participants were S.P. Sharma, Economic Analyst, and Rajesh Lake, Anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may share your feedback about this program through email at airnsdtalks@gmail.com or WhatsApp on 928-909-4044.